Hello, everybody. Finally, Fed Day is here. How is everyone doing? Happy Wednesday. Good morning, Patrick. Good morning, Sterling. Good morning, Tony. Good morning, Heinrich. We'll take a look at Google. Royal Palms, good morning. Hey, Sterling's way too long. Well, hope your position is sized appropriately, and I'm glad to see your stop losses are in place. Always a good thing to know where your stops are and to use stops. So let's see where we sit as going along into the Fed rate. That's really the big thing today. We had the mortgage information. We got new home sales coming out 30 minutes after the open. We got the EIA numbers for those crude traders. A slight little pullback in crude after the big rally the last few days. We got the FOMC at 1 Central, 2 Eastern. That's not the big thing. It's baked in. It's baked in for 25 basis points. Uh, they're not going to shock. I've heard people rumbling, oh, they might shock with 50 because they paused. They're not going to shock the market, and they're not going to not hike. It's pretty much a done deal. So everything's going to rely on the press conference. Everything. If you're actively trading in the market, I would at least have the press conference on in the background or be as having a headline feed that covers the important points. If you're very short term trading, if you're more medium term, just know where your stops are or know where your targets are. Should we pull back and then break out because it's thinking it's going to be a dovish? Now everything's going to be, is this going to be another skip? Are we going to hike and then skip? Are we going to hike and potentially hike again? Are we hike and that's it? So that's really the debate that's going to be. And I know Powell's going to, it's going to be data dependent. We're data dependent, blah, 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 blah. But it's going to be people's interpretation of, is he a little more hawkish? Is he a little more dovish? And then what the market does with that. So this morning, Microsoft so far down. After their earnings, Google up close to 6%. Meta reports after the close today, and we'll already have what's done with the rate hike decision, so that will free up Meta. But you will see what they do. But Google, decent results. I think it's getting a little overdone, but I can see why people are chasing it higher. Microsoft is looking a little toppy here after its multi-day pullback, but we'll be watching for a secondary reaction back up in that. And Google, will see how if they can sustain this run over the next few days. In terms of that, you have comm services, which Google and Meta. I mean, between the two, that's what's driving everything else higher. Let me just refresh this real quick. Yeah, technology is the weakest, but only down, not much. So a lot of mixed stuff this morning. If you stripped away Google and Meta, we just pretty much have a mixed market going into the Fed meeting. Right now, you see it's hike and pause through next March, and the current is 98.9 for a 25, 1.1 for a 50, so it's a 25. And then the next meeting, just to keep this in perspective, is not till September 20th. Okay? And the next big thing we have related to the Fed after this meeting will be Jackson Hole. So that's the next big thing before the next Fed meeting. So we still get that information. We're still in extreme greed mode. All right. In terms of that earnings, we already talked about Microsoft. Snap got crushed yesterday. Microsoft pulled back this morning. AT&T was, I think it was a beat miss or something, but it was pretty flat. Boeing was a beat. And up on that, Coke was up again. The Coca-Cola is still trading 27 times earnings. It's just, whew, for Coke. And after the close is Meta. Don't ignore Chipotle, though. Don't ignore. I'm curious to see if they're going to be able to do more price hike passing on to the customer. And then tomorrow morning we got McDonald's, MasterCard. We had Visa yesterday. That's the big thing. I don't give a crap about Royal Caribbean. So Where do we sit? Where do we sit? Good morning, PMG Trader. Good morning, Anissa. All right. We had the rally up, pretty much an exact double top in the S&P. I should call this an exact potential double top because, look, we could reverse after the Fed press conference and take out those highs. But you know what I'm going to say. We have a potential double top confirmed on a trade below 45.57.25, triggered with a close below that, and it would at least need a 4-hour close. Now, being a Fed meeting, if it were to break and it was attempted to trade intraday, you'd only want to carry it. The only way I'd carry it is then if we carried through to a daily close below that. Why? It's a lower probability because it's into the rotation zone. So, remember, in the rotation zones, you can get, without hitting the other side of the rotation zone, you can get a rotation back up. So that's where risk reward gets a little iffy. But that's the only topping thing in sight so far. On a continued pullback, roughly 45.70 is the first level. Now from the gamma, I didn't get the email this morning yet, but the key strikes are still 4,600 and about 45.50. So that 45.50 being just below the potential trigger point of the double. So we still have a lot of support just below this base of the potential double. Do keep that in mind. To the upside, if we do snap back, dovish Powell, we take out the 46.10 area, 46.25 roughly, and then 46.45 is very key over the next couple days. So that's exactly what I'm watching for. But on the continued pullback, this 45.71, if we pull back that far, I'll be watching for support coming in. That's my first initial level of support, and then back to 45.63. The NASDAQ, we had that little flagging pattern yesterday, broke out, pullback into the close, and so far just moving sideways with overnight sessions. Watching if we do pull back. Let me pull this off for real quick. Here's what I'm looking for. If it does break down into the open, I'm looking for a pullback to about 15,580, then 15,547. Anything below 15,547, this would set up a potential double bottom. Okay, so if we do pull back, keep an eye on that. And then if it was dovish and then, break back up, watch for that potential. If you don't get that far a pullback and it breaks above 15,739, you're into an advanced 4-hour clear path. Okay, the first area I'd be using would be about 15,865, and then you could still go. I'd use a stop rate about 15,877 and then return to the high area. And that's where I'd flip the harmonics back around. Because this closing above 15,845 takes it back above on a closing basis above the 62.5. And then everybody should know the 87.5 rule by now. All right, Dow. So far, the Dow, after its monster run, we're finally getting maybe pullback key support coming back at 35.3. You can set up your own short-term harmonics after hitting this 35.7 harmonic yesterday. Remember, 35.807 is required to complete the 87.5 rule. So on any pullback, I will still be watching for a push higher. Cycles are rolling over on the Dow. So remember, we could either get a slight pullback or sideways correction before that. Russell holding on to the last little sort of sideways correction here. Key support 1970, same as yesterday. If we break below that, 1960 on the closing basis. If we break below if we close below 1960, 1941 is the key level. If we hold here and break above 1988, I'm looking for a return to 2007. 2007. and then 2029 to we got the cluster at 2050. VIX ever so slightly up this morning, but still trading with a 14 handle. Nothing goes. The only thing I get worried on a bigger, if we're getting more fear coming in, is above 15 still. DAX finally breaking down out of this range. Going to be watching for key support back at 16,050, which is roughly the 50% harmonic from this last move and the 50 EMA, and we'll see if it gets some support there because it's still an overall consolidation. Notes, pulled back yesterday into the 50 to 62.5 with a little bounce here, but nothing fantastic. I'll be watching for a breakout of potentially with Powell above 112.02 or a breakdown below 111.17. So that's just very short term. The 10-2s broke to new lows yesterday. Fascinating. No, I mean, any run up in these, they just keep rolling over. Dollar index, we're getting we pulled back yesterday, closed back below the rotation zone. Now just pausing sideways. So if Powell is hawkish, much more hawkish, we could see a one-day pause breakout from the dollar index, and then I'm watching really for this return to the 50, about 101.60. On a dovish Powell, I'd watch for the continued pullback in this. And the key pullback area, not necessarily just for today, but if we started pullback, would be 116. Crude, finally we broke out. We paused, and now we have an inside day so far. We break down below yesterday's low. I'm watching for more of a return back to this mid-77. Other than that, if I will be watching for a resumption of move back up, unless, again, we close back below the 200, which and it would take it into the rotation zone. So that would be the only thing bearish, which would then I'd be watching for a bigger pullback in crude. Gold, little bounce and stall out, but there's not a major pattern just yet. Okay, there's PEP. Gold head and shoulders on the daily. Can we check it, please? What, the inverse? This? Is that what you're looking at? This is where I would utilize the flat neckline, by the way, and let's see if it would be valid. And from my rules, it is not. So what I would do instead, personally, if we break above 1995, I would utilize the retracement harmonic area, and my first target would be 2016. We close above 2016, then I'd be going up to this 2055 to 2060 area. That's how I'd trade that with targets. And it is a little rather sloppy with this left shoulder, and the targets don't match up. So this would be the key breakout level. You had the breakdown, retested, and rolled over. We've run up just in front of it, and that is very key resistance. So besides anything very short term, I'd need a move above that 1995 level. What else? What else? Let's just get through some of these. The yen, well, unless the dollar starts rallying, we'll be watching for a continued pullback in the yen, but nothing's great setup there. Pause so far in the euro. Just flip my comments on the dollar, and I'm watching yesterday's highs and lows for the complete thing. We've already pulled back between the 50 and the 62.5. So watching for a bounce pattern in here with the cycles at the low, and that would be on breaking through yesterday's high. Pound also pulled back from 52 and the 62.5. This was a % buy yesterday. Let's see if we get some follow through. Again, the stop would have to be below 127, about 95 on that one. What else? Bitcoin after the breakdown, just pausing. So holding below support, not much to talk about there. Spiders in the Qs. Again, on any rally, I'd be looking for the first target Let's see. We're trading above yesterday's open, so we're still inside to there. So the first target would be then the close, besides any short-term targets, 455.44. Then yesterday's high area, 456.74, and then we still have 458.85 to 459. Major support, 452 to 452.50. That's where that sits. The Qs, I'll be watching on a pullback to see if we form the double bottom, but major support, I'd use your short-term harmonics on this for the Qs. If we pull back below about 376, it forms a potential double bottom, so that's the level I'm going to be watching. Right now we're trading 377.91, so on any rally, 378.78, and then I'd be looking at yesterday's high, about 380. 381.16, 382.87 is very key on the closing basis. Major support, if it does break below Monday's lows, would be the bottom of the rotation zone and the gap fill, 372.72 area. Real quick on Tesla. Quick reversal after nearly hitting the first target, but not yet hitting the pattern invalidation. So that's what I'm watching for today. But the continued breakdown if we go below 255, and that would be a failed pattern if this comes back down to stop levels that I talked yesterday, which the failed pattern would then lead me to watch for a retest of the June 26 low area. NVIDIA, still double pattern in place, not yet on the little rally, not yet invalidated. We still have Google. Google invalidated the not confirmed double top. Remember, we've closed above the 62.5. The next targets I'll be watching, should this continue and hold, the key support now is the 62.5 level, about 126. All right? You can always use the reverse harmonics right here for minor targets. My key major target is 134.50 if the rally continues. Right now, we're trading 129.75. Above there, if it just keeps pushing, then it'd be the 87.5 rule at 143.02. So that's where that sits. I'd use these minor levels as if you were long, or stop breakout levels like to raise stop. Like 132.46 I'd use as a stop raise personally. What else do we have? Hey, Christoph. USJPA 4-hour cup and handle. Where's the yen again? Here we go. 4-hour cup and handle. That's just, no, that's just use this as a channeling pullback. Just use this as a channeling pullback. So I'd be watching for the rotation up, and if you want more confirmation, I'd be really using this 141.50 as the level to really confirm it broke out of the channel. Other than that, because this is not, you're going to want to have a rally, then a little cup, then a handle. This would just be a huge, and this is not close enough to the highs. So this is just a channeling pullback. But that's how I'd view that. All right, let's just peek back in. That's where we sit. Let's take a look at Microsoft. I didn't call up that real quick. Microsoft with the gap down. Little thing I'm watching on a closing basis is this 341. 341, what is it exactly? 341.92 on a closing basis. We close below that, then we'll have closed below the 62.5 and this, and look where the 87.5 is. And the 50, and we have a gap fill left. So if we do get the close below the 62.5, then the probability shift to a retest of the 50 and this gap fill. Other than that, if we rally back up, I'd be watching for the first going to yesterday's open before the close. So that would be key. But this level is very key. And does that mean major tops in Microsoft's pulling all the way back. No, I'd be watching for the pullback to the 50. And actually, it has not reconnected with the 50 since March. And that would be in a major support zone. And then I'd reassess from the bullish case. But that would be the only continued bearish play. Yeah, thank you, Royal Palms. Amazon completing double top on FT. Did news just come out on? I didn't see with the FTC. Yep, it is completing the double top. Thank you for pointing that. You guys are great. Thank you, Jacob. There's another one. Again, doubles are not guarantees. You do get them invalidated and stopped at times, but they are great patterns to learn. And there you go. It looks like it's going to open right pre-126.70, 126.71. Right there. Thank you for putting that in. If it did continue lower, the next key target would be the area of the 50, about 124.50 to 125, and you do have a pretty strong support base down there. If that would be the only next thing I'd be watching for with cycles getting to the bottom area. Again, thank you for putting that out there. What did you have, Sterling? You have XPEV. Huh. Interesting. I did not see that news. I must have missed it. There you go. That is up. I have not looked at XPEV in a while, obviously. It's not one I look at on a regular basis. But where are we trading? 17. Nice little breakout after that. So next key target, if this continues, would be 2077. You just don't want to close back below 15. You don't want to lose back at the 15 level if anybody is bullish on this. But there's that little breakout. So I'd be watching for that most recent pullback retrace. This was a decent bottoming pattern. This is what a solid base looks like. I don't care what, if you trade this stock. This is where you have a decline. Study this pattern. And it doesn't matter for stocks or futures or commodities or anything, especially once we get the bigger pullback in stocks again, which I still think we will. This is the kind of pattern you want to watch for building a solid base in a stock. Unless there's a major double bottom pattern, if there's something extended like this, this is a great extended base. You see here, retests making higher key lows in this base. You had the little mini double that hit completion, then it came back down. Then we built a sideways base, broke out, and you see here, broke out, and now we're basing higher than that. So that's the kind of thing, if you're looking to learn patterns, what an extended sideways base looks like after a major sell-off. Thank you, Royal Palms. Doubles test out a little higher than head and shoulder patterns. Doubles are better than head and shoulders patterns. Okay? Thank you, PMG. Thank you, Anissa. There we go. I'm going to wrap it up going into the open. I hope everyone has a wonderful Fed trading day. Again, as Sterling said, know where your stops are and know we can have volatility, especially related around when Powell's speaking. That's why I really like to have what's called a walk-away stop, whereas that's an emergency stop and that's farther away. And then my normal stops are on a closing basis that, I don't care if the market trades around those levels, but if it closes below that key level, then that takes me out. So that's the way I judge stops. With that, I will talk to everyone later. Bye for now.